We're looking at a chart of continuous copper futures as of the close on April 10th. You can see here that on January 14th, copper made a spike low that came within 7 ticks of my major target support line. That was within my margin of error, so on our January 24th weekly public podcast, I said I believed that copper had bottomed. Here is a clip from that call beginning just after the 18-minute mark. In copper, I believe we've hit the bottom. And I don't think we're ever going to see, well, I shouldn't say ever. I don't think we're going to see a new low in copper for a year, maybe, something like that.
Oh, wow. Okay.
So I think we've hit a long-term bottom in copper. But any analysis can be wrong, and I have very specific support lines that would say where we should stop out if one was long.
Okay. Yeah, I know you have a very unique way to approach the market from a technical perspective. I know you have your own method that I can attest to is incredibly accurate. So when you say that copper has bottomed out over the long term, people should definitely listen to that and take it very seriously. Why do you think that is? Is there anything fundamental behind it? Or it's just a purely technical kind of setup?
In this case, we're talking purely technical. My readings are fairly definitive, saying we've hit a very important support, and that the pattern shows that we should be moving up now. Okay, so that was the call on the 24th, represented here by this bar. 36 hours later, copper made another spike low that hit the line almost perfectly, exceeding it by 2 ticks, which is well within our margin of error at less than 0.1%. Any one of these 3 lows was a great place to buy. Moving forward, I am long, and I will only stop out on a breach of our upward sloping line. Even if we are stopped out, which I think is unlikely before we hit target highs, it will happen at a higher level than where we bought, virtually guaranteeing a profit on the trade.